We are covering the other insurance condition and the principle of subrogation, two critical concepts you must master for the property and casualty exam. The other insurance clause upholds the principle of indemnity, ensuring an insured does not profit from a loss by collecting from multiple policies for the same damage. When multiple policies cover a loss, this clause dictates how they will share the cost. The exam will test this in two primary ways: through primary versus excess coverage and through contribution by pro rata liability. Primary coverage pays first, up to its policy limits. Excess coverage only begins to pay after the primary policy's limits have been completely exhausted. For example, if a driver causes an accident in a borrowed car, the car owner's auto policy is primary, and the driver's policy is excess. The owner's policy must pay out its full limit before the driver's policy contributes a single dollar. Now, when two or more primary policies cover the same loss, they share the payment through a method called pro rata liability, or contribution by limits. Imagine a building is insured for $400,000, with Company A providing a $300,000 policy, and Company B providing a $100,000 policy. For a $40,000 covered loss, Company A would pay its proportional share, which is 75%, or $30,000. Company B would pay its 25% share, or $10,000. The exam loves to present these math scenarios, so be prepared to calculate each insurer's proportional share of the loss. Next, let's discuss subrogation. Subrogation is the insurer's right to step into the insured's shoes to sue the at-fault party and recover the claim payment. For instance, if your neighbor's faulty grill starts a fire and damages your house, your insurance company will pay for your repairs. Then your insurer will pursue your neighbor or their insurance company to get that money back. The purpose of subrogation is twofold. It prevents the insured from collecting twice, once from their insurer and again from the at-fault party, and it holds the negligent party responsible. A common exam trap is confusing subrogation with salvage. Subrogation involves recovery from a responsible third party, whereas salvage involves the insurer taking possession of damaged property to sell and recoup some of the loss. As an insured, you have a duty to protect the insurer's subrogation rights. You cannot waive these rights or do anything to impair them after a loss occurs. For example, you can't tell your neighbor, "Don't worry, my insurance will handle it," because that could prevent your insurer from recovering the damages. However, an insured can waive subrogation rights against a specific party before a loss occurs, which is known as a waiver of subrogation. This is often a requirement in commercial leases, where a tenant's insurer agrees not to subrogate against the landlord if the landlord's negligence causes a loss. The key takeaway for the exam is that this waiver must be agreed to in writing before the loss. Here's a simple way to remember it. Subrogation is substitution. The insurer substitutes for the insured to sue the party at fault. For free practice questions, AI-powered explanations, and more exam prep tools, visit openexamprep.com. That's openexamprep, all one word, .com.